MSME funding can't be neglected, okay, agreed, because the focus is on inclusive growth, agreed. Skill development programs have to be enhanced. That has to be done immediately. You can't postpone it. What does it indicate? How do I look at it? Some say it is wrong, some say it is right. Whatever it is, that means government is looking at long-term investment and stability rather than short-term resilience. Basically, the capex done by the center plus grants given to the state for capital purpose.
UPSC doesn't punish less study, it punishes unchanged mistakes. If the same issues keep repeating, your prep isn't improving. It's just getting longer. Recall drops in mocks, answers stay generic, elimination errors repeat. Current affairs doesn't convert into mains points. These are signs your preparation needs correction. That's not an effort problem, it's a system problem. Vision IAS Delhi GS Foundation is built to fix this early. Sequenced classes, timely tests, built-in revision, mentorship reviews. PT 365 and Mains 365 make current affairs usable in answers. If UPSC 2027 is your target, start with a structure that makes improvement predictable. Batches starting from 3rd February at 8 am at GTB Nagar and 6th February at 11 am, 13th February at 8 am and 24th February at 5 pm at Karol Bagh. For more information, visit our website or call us on the given numbers.
Good afternoon. So my name is Ram Sudhir. I'll be giving you a brief overview of economic survey of the first 4 or 5 chapters. Okay, so then it will be continued by other teachers, right? So this is not a detailed discussion. So it will be a 45 minutes discussion where we will just see the overview. Okay, so that would be the approach. Okay. So we'll try to link few things what we are seeing in the economic survey with the budget. Of course, budget is not our discussion, but whatever is stated in the economic survey, is it getting reflected in the budget? So this would be our approach, right? So okay. Now, before we understand the theme of the economic survey, if you look at what is the theme, anybody? Entrepreneurial policy making. Okay. Okay. Uh-huh. Okay. Okay. Got your point. Right. So when we look at, is it visible? Yes. So when we look at the theme of economic survey, if you see here, pushing the growth frontier, resilience-led growth. Okay. Pushing the growth frontier, resilience-led growth. Of course, what he's saying is also right. Okay, so here, when we look at economic survey, basic understanding of the theme. So one, it talks about how we build an entrepreneurial state. He's talking about entrepreneurial state. So what is this entrepreneurial state here, and why we have to build is what we'll try to understand. Okay, so the meaning of entrepreneurial state is basically there is a lot of uncertainty around us. There's huge amount of risk which we see everywhere. So whenever there is huge amount of risk, what would be the strategy of the government? So will government work like government structure, or is it going to work like a business unit? That is what is entrepreneurial state. That means there is huge amount of risk, and when the risk is increasing, what is our strategy going to be? Got the point, right? So this is what is the focus of the economic survey. That is, so if you want to increase the growth of India, and when there is a lot of uncertainty around us, how is the government going to respond? So the same thing was seen in the budget also. Okay, so here if you look at one important observation here, so one is the entrepreneurship. Then you see running a marathon and sprint at the same time. Okay, running a marathon and sprint. This is what is there in the preface of the economic survey. So what is this marathon and sprint? So marathon is long term. That means government has to work towards long term stability. Then what is sprint? Immediately there are a lot of concerns which government has to address. Now, do we see this in the budget? Can we see somewhere? Have you observed this kind of attitude? That means you have to balance both. Balancing both means what? Immediately there are a lot of concerns in the Indian economy which have to be immediately addressed. And at the same time, there is something like long-term stability that has to be achieved. That means government has a long-term view with respect to the policy framing, which is called as marathon. At the same time, government cannot neglect the immediate problem. Immediate problem, what are the immediate problems? Okay, MSME funding can't be neglected, okay, agreed, because the focus is on inclusive growth, agreed. Skill development programs have to be enhanced. That has to be done immediately. You can't postpone it. Are you able to get this? This is immediate. Rupee value is depreciating right now. Rupee value is depreciating in spite of macroeconomic stability. This is something which the economic survey is saying. For example, here, the paradox of 2025 is that India's strongest macroeconomic performance in decades has collided with a global system that no longer rewards macroeconomic success with currency stability, capital inflows, or strategic insulation. So what does that mean? It means there is macroeconomic stability. How do you say there is macroeconomic stability? The survey is assuming, IMF assumed that India's growth would be around 6.4 to 6.5%. And when the whole globe is not doing well, then 6.4 to 6.5 is a decent growth. Okay, this is IMF. What is the survey target? Survey target is 6.8 to 7.2. Survey has given a range with respect to our economic growth, 6.8 to 7.2. This is again decent. This is again decent growth compared to the globe. We have to compare with the globe, look at other countries, how they are performing. That means there is macroeconomic stability, but at the same time, we see that the foreign investors are moving out of India. There is capital outflow out of India. This is one important observation, you see. Capital outflows are there. Along with that, FDI outflows were also very high last year. Outflows I'm talking about. Okay, and there are FPI outflows also. FPI outflows is from the stock market and bond market. They are moving out. So this is something which you should understand. That means macroeconomic stability is not rewarded with what? Currency stability, capital inflows, or strategic insulation. This is what is the background. So therefore, what should our policy focus on? How should our policy deal with such a kind of situation? So the preface is like something like it is setting a discussion for the survey. Is that okay? So what should be done? So therefore, from this background, what government wants to tell, one is we will think more like an entrepreneur. That means immediate risks are there. One of the risk is fall in currency value. That is one risk very clearly visible. Second risk, the tariff risk, which is already there. And there is a lot of geopolitical tensions which are very clearly visible. That means what will happen next minute? Nobody knows. Venezuela is over, Greenland, Pakistan. Many things are there, and anything can happen right now. So this is something like the risk has to be accepted as an entrepreneur. Okay. Then we will focus on short-term policies, that is sprint, as well as long-term, that is marathon. Both have to go together, and this will help in pushing the growth frontier. That is called as a resilience-led growth. Simple example from the budget. Securities transaction tax on derivatives was increased from 0.02% to 0.05. This is 150% increase in futures. Okay. You know, if foreign portfolio investors are moving out, already they are moving out. Everybody knows that they are running away from India. Then such a kind of policy, like increasing the tax in the budget, okay, what does it indicate? How do I look at it? Some say it is wrong, some say it is right, whatever it is. That means government is looking at long-term investment and stability rather than short-term resilience. Short-term gambling has to be discouraged in futures and options. Government is talking about more stability and long-term investments to move into the economy rather than short-term. That means long-term resilience-led growth, which the economic survey is saying will be clearly visible in the budget also. The policy is clearly visible in the budget also. I'm not saying whether STT increase is right or wrong, but government is looking at long-term investors to move into India. Immediate outflow of foreign portfolio investors may not be a concern. It is a concern because that is also a reason for rupee value depreciation. I think this is just to tell you that yes, government is looking at it from. Okay, clear, right? So another important aspect as part of the preface or the theme they talk about is last year budget also talks about deregulation. And deregulation means reducing government's interference with respect to many aspects related to business. Okay. So this year's budget, this year economic survey is also talking about deregulation. Okay. And long-term capital development. Capacity development in the long term along with deregulation is another aspect which is focused in the budget. I hope it is clear. Is that clear? So budget also talks about that. Economic survey also is focusing on that. Okay, there are some data here, some data I've pushed in. Of course, data is not important in this class, but just for information. Our growth metrics are around 6.8 to 7.2%. This growth metric, is it real or nominal? Real, okay. So in the budget, when madam came up with the targets related to her deficits, for example, FD madam is saying 4.3% of GDP in the budget. Okay, last year FD target was 4.4%. Okay, so if my budget is around 53 lakh crore, and if government has decided to borrow 17.2 approximately lakh crore, borrowing 17.2, which is high. Okay, so but still government is saying my fiscal deficit would be 4.3% of GDP. How is this possible? I think you got my question right. 4.3% of GDP is my FD target I want to achieve, and you're borrowing approximately 7.2 lakh crore, let's say, and around 53 lakh crore is the budget. Okay, that means government has assumed a nominal GDP for the next year around 10 to 10.1%. See, all these targets which government has fixed, 4.3, it is all on the nominal GDP, not on the real GDP. It's on the nominal GDP. Are you able to get this? So government would have assumed a nominal GDP number, a potential nominal GDP number also. So nominal GDP number of 10 to 10.1%. Let's say if I take 6.8 plus another 3.8% inflation. The real GDP 6.8 to 7. So let's take 7 and then put around 3.5. 3.5 would be 10.5%. That means government has assumed a nominal GDP rate of 10 to 10.1 or 10.2 to 10.5%, based on which madam is talking about the targets. And 10% plus in the current scenario is very optimistic as far as nominal GDP is concerned. Are you able to get this? So why nominal GDP becomes important here is because all the targets which government is mentioning in the budget are basically based on the nominal GDP figures. I hope it is clear. Okay, so 6.87 plus another 3.5, put 10 to 10.5. Is this clear? Okay, fine. Now, growth, we have kept the growth targets, and growth can come from different areas. Now here, domestic demand, we can see here, private final consumption expenditure around 61% of the GDP. Okay, and this is coming from rural demand and allied sectors demand also in the agriculture. That means government is talking about there is a very strong consumption which is clearly visible, right? Then urban demand is also seen where you have tax rationalization plus low inflation. You know, see this, all this economic survey or budget has to be seen as a continuation of previous budgets or previous reforms. For example, last year itself, there were a lot of reforms in the income tax. Huge tax rebates were given. Everybody is saying nothing is given, nothing is given. Already the tax rebates were given up to 12,75,000, including the standard. You know the standard deduction is also there. So up to 12,75,000 rebate is already given, and a lot of discounts are already there. GST 2.0. So all these tax reforms are already there, and it is more like a continuation of the policies rather than expecting something like a game changer in the budget. Okay, so this is basically a Goldilocks situation. Goldilocks zone is what? High growth, very low inflation plus fiscal consolidation. I think it is clear. Okay, so basic theme. Of course, the first chapter talks about many things here. Okay, it talks about growth, it talks about my external sector outlook and deficits and many other things. So the second chapter basically talks about the fiscal reforms of the government, isn't it? And when we look at here, if you see fiscal deficit 4.4 to 4.9% of GDP, consolidation from 9% during the COVID year. So during the COVID year, almost we have touched 9.2, and from there we have put in efforts in terms of reducing our fiscal deficits to almost like 4.4. Next year target in the budget is 4.3, which is quite decent. Is that okay? Yes. Then potential GDP revised to 7%. Potential GDP revised to 7%. 7% is an average like 6.8 to 7.2. On an average, we are saying, okay, around 7% is what can be expected. Now, one more important observation is with respect to the external sector. I'll mention these things a little later in the other chapter. When we look at external sector, we see some export growth around 5.9%, 25-26. First half of 25-26, export growth is around 5.9. So when we look at services sector and goods, okay, which one is growing at a faster pace when we talk about exports? Services. Approximately, service sector exports approximately contribute how much percent of the global trade? Services of India, basically. What about goods? Goods is around 1.8%. Goods is around 1.8, 1.9%. Services is around 13.5%. Okay, so one of the important observation is India has to focus on manufacturing. India has to focus on manufacturing and manufacturing exports. This is what we should understand. Okay, fine. Now, what are the policy implications? What should be done? One, sustain public capital expenditure plus private investment. What is the capex spending in the budget approximately? 12.2 lakh crore. Okay. Is that okay? 12.2 lakh crore. It's a decent enough public expenditure. So my GDP should come from either C plus I plus G plus NX. I think everybody knows this formula. So we are doing well on the C front and also on the G. C and G are doing well. Are you able to get this? Now, only concern for the government can be in terms of I. I also, it is decent when we look at 12 lakh crore estimation in the budget. It is quite decent. But I has to increase at a faster pace. I is basically you're talking about gross fixed capital formation. We're talking about investment basically. So growth is dependent on two things here. One, public capital expenditure along with private investment. This is what is the policy which we have to focus on. Okay. Second, deepen human capital. That means you're talking about health, education, skilling. It is immediate priority. I'll put skill development and focus on education in the sprint. Got the point? I'll not put it in the marathon. Has to be done immediately. Got the point, right? The focus is immediate. Then push strategic indispensability. That means when you know globally there is a lot of trouble. There can be supply chain disruption anytime. Anytime oil prices can increase. That means inflation can increase. Anytime this can happen. And there's huge amount of supply chain disruption that can happen anytime. So obviously you're again looking at Atmanirbharata, or you're talking about indigenization. This is the focus. That means India has to become self-sufficient with respect to certain critical aspects along with these things. Is that okay? So this is the basic background of the first chapter. Basic background. Of course, we'll dig deeper into the chapters later, but this is the basic background of the chapter. Is that okay, everybody? Understood? Now here if you observe the second chapter, fiscal developments, anchoring stability through credible consolidation. Okay. Now when we talk about consolidation, here we are talking about which consolidation? Fiscal consolidation. As simple as that. Okay. Now the present government, obviously, we can say that yes, they are working towards fiscal consolidation. So how do you work towards fiscal consolidation? You have to increase your receipts and you have to reduce your unwanted expenditure. So if you look at the reforms which we have done, so our tax reforms which you see, including the GST or many other reforms. So on one side, we have to focus on increasing the receipts and reducing the expenditure. Of course, in the budget, if you would have observed the budget yesterday, there was some discussion on MAT. MAT is what? Minimum alternate tax. Okay. So one is looking at the theme in the economic survey. Second is how do we link it to the budget. So with respect to MAT, they have reduced the MAT rate yesterday. Rate was reduced from 15 to 14%. Okay, but though the rate is reduced, there is something called as MAT credit. That means earlier, see, MAT is one type of tax which is levied on corporates which claim themselves to be zero tax companies. Okay, due to they use certain loopholes in the system and they claim themselves to be zero tax companies. But when I look into the books of the company, you observe decent amount of profits getting reflected. That means if I see the P&L statement of the company, profit and loss statement, you'll find certain profits are clearly visible. And still the company does not pay taxes as expected. That is when MAT comes into picture. Minimum alternate tax. Okay. Whenever you pay MAT, you can, if you're paying more amount of MAT, suppose there's corporate tax is there, MAT is there. If your MAT is more than the corporate tax, you can carry forward that amount subsequently and take it as a credit. That means you can hedge this or you can get a discount on these extra which you have paid and you can pass it on to the subsequent years if you're paying more than your corporate tax. This is called as a MAT credit. So government has removed this MAT credit. That means government is saying this MAT would be something like a regular tax. So government is very strong in terms of telling you that this MAT would be a regular tax henceforth in the budget. That means very clear signals are there with respect to taxes, whether it is STT increase or whether it is MAT credit related issues in the budget. Are able to get this? So in the economic survey, what does this chapter argue? A calibrated fiscal strategy, balancing deficit reduction with growth supportive capex. On one side, we will reduce the deficits. On the other side, we will still focus on the capex, that is capital expenditure. This is what it is. So the 12.2 lakh crore which you're talking about now. So we'll focus on capex also. But at the same time, my FD targets would be around 4.3%. Okay. Has anchored stability. Credible consolidation signals policy discipline, boosting investor confidence, and lowering sovereign borrowing costs. Now, what is the observation? Several credit rating agencies have improved our rating. Okay, so what is the benefit if they improve our rating? Suppose there is prudential fiscal management as the key driver behind sovereign credit rating upgrades. That means India as such, our credit rating has been upgraded. So what does that mean? That means India has a better CIBIL score. If India has a better CIBIL score, indirectly CIBIL is for individuals. Okay, we have a better credit rating means borrowing cost would be lower in the subsequent year. This is what is the meaning. So my fiscal prudence has not gone waste. It is reflected clearly with respect to upgrade in the credit ratings, so that my borrowing would be decent enough in the subsequent year. I hope you are able to get this. Okay, but now if this is the case, when everything is okay, then why is it that yesterday the markets reacted differently with respect to the budget? So when budget started, everybody started selling. And yesterday there were no FPIs also. Sunday, no? There are no foreigners in the market. There were only Indians. Yesterday is a Sunday. Only we were participating and everybody was selling. When there is so much of fiscal consolidation, our credit rating has been upgraded. Rating has been upgraded. When all this is positive, why is that in the budget, when the budget was going on, then why is that everybody was selling off now? STT is one. Second is 17.2 lakh crore borrowing by the government. This is a record high. The next year, government is going to borrow around 17 lakh crore. That means what? Government is borrowing more means how will government borrow? By issuing G-Secs. That means there will be more G-Secs available in the market next year. More G-Secs means price of the G-Secs will decrease. If G-Sec price is going to come down, G-Sec yield will increase. That means government bond yields probably next year may be high. If the government bond yield is high, investors can remove money from shares and put it in bonds. This is what is the observation. That means when economic survey is saying everything is looking good with respect to fiscal consolidation, then why is it that people reacted in a different way yesterday? Is because of the expectation of increase in government bond yields because of that 17 lakh crore. 17 lakh crore. 17 lakh crore looks high, though you are looking towards fiscal consolidation. Now the question comes up, this 17 lakh crore would be what percent of my GDP? That is important. That is the reason this 17 lakh crore would be what percent of my GDP. That means if my GDP is going to be okay next year, then automatically my fiscal prudence will be okay. See, always it is as a percentage of GDP. You're saying 4.3% of GDP or 4.4% of GDP. That means if my GDP is going to do decent next year because of private final consumption expenditure or increase in investment, etc., if that is going to do well, then automatically my number will be in control. But what if my nominal GDP does not increase? Like recently, nominal GDP stuck at 8.1, 8.2% only because inflation was low. So what if the similar kind of situation comes up, then fiscal prudence can become a challenge for the next year. Are you able to get this? Then fiscal prudence can become a challenge. That means whatever government has set a target, 4.3, that becomes a challenge for the government if the GDP does not increase as expected. Is that okay, everybody? Understood? Okay. Now here you can see some data. Revenue side consolidations. This is what government is talking about. Centre's revenue receipts increased to about 9.2% of GDP in financial year 2025. It is driven by expansion of direct tax base and robust GST collections. GST collections in the first half 2025 increased by 6.7%. This is year on year. I'm talking about YOY, year on year. So 17 lakh crore. This shows some good collections for the government, both direct as well as indirect. Okay, so this is. Then expenditure rationalization, obviously, if you are comparing with the COVID year, check the fiscal deficit, we have reduced it to a great extent, 9.2% to almost like 4.4, and now you are targeting 4.3. This shows, yes, rationalization is there. Then capex-led growth, effective capital expenditure reached 4% of GDP in financial year 2025. 5. Effective capital expenditure means, okay. So it is basically the capex done by the center plus grants given to the state for capital purpose, both put together. Okay, so that effective capital expenditure is historic 4% of GDP, which is again looks to be a positive aspect. That means overall, what government is trying to tell is there is fiscal prudence and there is stability as far as fiscal consolidation is concerned. Okay, so that is also government also gives supporting data here. If you see, that is with respect to the ratings. Okay, so here if you observe, improved revenue buoyancy, continued emphasis on capital expenditure, improved fiscal transparency, and continued deficit reduction along a credible path. So government is very optimistic. Of course, obviously, survey, though it mentions some problems, there is a lot of optimism that is clearly visible, including FDs and primary deficits here. Primary deficit you can see here 0.8 and FD around 4.4. Of course, I'm not interested in the data in this class. So budget target is 4.3. Is that okay? Yes. So economic survey mentions some state level challenges with respect to state spending. Now some states say no, they are pushing it on states. Okay, so they're not happy about it. But obviously there is more prudence required from the state. This is also clearly visible. And then debt to GDP improvement also. So general government debt to GDP declined about 7.1 percentage points since 2020. Of course, government is comparing it with 2020. Got the point. Few things government compares with 2020 because right now also there's a lot of volatility, lot of uncertainty, and therefore if I compare it with that year, yes, the debt to GDP has come down by about 7.1%. Is this clear? Okay, so I hope it is okay. So this is about the fiscal consolidation part or the fiscal development anchoring stability. So this is a brief overview. We're not digging deep into the chapters. I think that should be clear. Okay, so that would be separately discussed. Each chapter would be discussed separately. I hope it is clear. So this is basically an overview of what themes in the survey. Okay, fine. Now see here, monetary management and financial intermediation, refining the regulatory touch. Okay. So this shows what about our monetary policy. What is the main target of our monetary policy? Inflation targeting. And right now inflation is under control. There's no issue with respect to inflation. Okay, inflation is under control. Okay, so that means probably we can understand that RBI has more freedom in terms of focusing on growth. RBI. So we have to look at it from this perspective that RBI has more freedom to focus on economic growth because inflation is under control. Okay. This is one. Second is there is a discussion about banks' health in this chapter. Banks' health, how banks are doing well. So how do you mention about banks' health? So how do you estimate how banks are doing? So one important indicator which will show how banks are doing is obviously based on NPAs. Okay, so when we look at NPA, both gross NPA as well as net NPAs have reduced to a great extent. Net NPA means net NPA is gross NPA minus the provisioning done. So what we observe is both gross and net NPAs have come down. Both gross and net NPAs have come down, and what we observe is this you find after 2015-16. This shows the success of IBC. Are you able to get this? This shows the success of IBC, Insolvency and Bankruptcy Code. So earlier there were a lot of other programs like RBI policies were also there. No? RBI came up with several special mention account, asset quality review. Okay, so Indradhanush program. All these are programs to handle NPAs. We were struggling to reduce NPA. But after IBC was brought in, automatically NPAs are under control. So what is the logic? If NPAs are under control, inflation is under control, that means banks can focus on giving enhanced credit. That is what is the logic, which is one of the major driver for my GDP. As that is, it will help in C as well as I. This is what we should understand. Why is this important? This is important because I can take risk in terms of giving loans. Similarly, one more observation is, as gold prices have increased, so many gold loans are taken by people now. Gold loans, Muthoot Finance data if you check, Manappuram Gold if you check, that means gold loans. Gold loans are secured or unsecured? These are secured loans, no? So more that means gold loans, chances of gold loan becoming NPA is less. Why? I can sell the gold in the market. These are more secured loans. And public is taking more of secured loans, which will help my consumption, means it's a positive factor for the banking sector for the next year. Able to get this. It's a positive factor. It's not a negative factor. It's a positive factor. One side, NPAs are coming down. On the other side, gold loans are improving. Gold loans are more secured loans. They're not like the personal loans. Personal loans are very risky, but gold loans are not risky because gold is a solid asset. Of course, though gold has fallen yesterday, 2 days, let it fall, but still it's a solid asset which can be sold in the economy. So this is one more important. That means we can focus on that 7% growth is the link, because of the availability of credit without worrying much about inflation. I think it is clear. This is what we try to understand. Of course, data, if you see the data here, the data clearly shows the asset quality of banks has improved. So when we look at gross NPA around 2.2% and net NPAs around 0.5% by September 2025. Except for the urban cooperative banks where NPAs are a little trouble, most of the banking sector is doing great. Okay, and then if I look at credit growth, bank credit to MSME grew by 11%. This is of course August 2024 data, which again strengthens the theme of inclusive growth. When I look at inclusive growth, funding MSMEs becomes very, very critical. More than 40% of exports, 60% of MSMEs have a rural base, 20% of MSMEs have women owners. When I look at MSMEs as an entity, MSME helps in inclusive growth. That means along with growth, government is saying, yes, we are focusing on inclusive growth as a theme in my economic survey, where my focus would be on micro, small and medium enterprises. Are you able to get this? Okay. So here, financial inclusion. So government also talks about financial inclusion. Of course, more than 10 years of Pradhan Mantri Jan Dhan Yojana. So we look at NPS pension schemes as well as insurance penetration, etc. There is a very good improvement which we see as far as India is concerned. So this is a very positive aspect when we look at financial inclusion. Is that clear, everybody? Understood? I think it is clear till there, right? So now, this chapter, actually this chapter is, few chapters are important. One, obviously the state of the economy is very important. And there's a lot of discussion on AI and data centers in the economic survey. AI and data centers is a separate theme in the economic survey. There's a direct focus on these things. Okay, and then how do we stabilize our external sector is another important aspect which there's a detailed discussion. Okay. Now, are there any positives which we see with respect to our external sector? Of course, external sector, there are a lot of issues. See, when we look at the preface of economic survey, what it says, entrepreneurial mindset. What is an entrepreneurial mindset? Means I will take up risk. That is called as risk taking. Somebody is saying 50% tariff. Somebody means you know who. Or tomorrow they come up with another 25% tariff. Okay, so basically India has to take minute steps, which we call it as compounding. See, what is a compound? See, Einstein says compounding is the eighth wonder. Not about money alone. It's not just about money. It is also about my incremental baby steps which I take every day. Same applies with respect to government policy. When there are turbulent times, you can't take drastic decisions. You take minute decisions and you improve by 0.01% every day also, the compounding effect would be huge. This is what it means. This is what is compounding all about. Okay, for example, when we look at US creating trouble to India, then automatically we decided to sign many trade partnerships, whether it is EU, whether it is UK. So concluded 8 FTAs, SEPAs in the last 5 years with negotiations ongoing for EU, UK and Peru. This is what economic survey is saying. That means minute gains every day will have a drastic compounding effect on Indian economy. We are not saying that, oh, US is gone, so everything is gone. US is gone, it's okay. I'm saying US is gone, though our government does not agree. Government says already trade deal. Okay, so government is saying already our trade deal is almost done, but I don't believe that. Okay, that too with a person like Trump. I'm excluding that. I don't believe when the trade deal will happen and how is it going to happen. Anytime there can be a trouble with US. So obviously an entrepreneur tries to diversify. Simple logic, no? Why will he set up so many businesses? To reduce what? Risk. Same applies when it comes to India signing different agreements, signing alliances with different countries, though it might irritate US. These are called as incremental improvements day by day. I think it is clear. So here if you observe, India concluded a lot of trade agreements. India is playing the long game by building strong external buffers to withstand global shocks. Long game, marathon. This marathon is by diversifying my risk, not being dependent on only one country when it comes to my external trade also. That is very important. Another important observation, our Forex reserves are at 701 billion as on Jan 2026. Okay, so that means almost like we can cover, import cover can be almost like 11 months you can cover easy. That means tomorrow there is a trouble that our exports are not happening. We have to manage with RBI reserves also. Around 1 year we are safe because we have something called as Forex reserves in our pocket. This shows this is very important at this point. Why it is very important? Because anything can happen, supply chain disruption can happen, our exports might come down in the future, and still I have sufficient Forex which will help me to manage things. I hope it is clear. Okay. Then there are a lot of discussions on current account deficit. Of course, here there is some aspect. See, wherever there is some trouble, for example, current account deficit, government is trying to compare it with previous years. Okay, so if I look at current account deficit in the first half of financial year 25-26, it is around how much? 0.8%. Is that okay? So 0.8% of CAD. Okay, so which has come down from 1.3% in the first half. 25. But what is the problem with respect to current account deficit is, so we see that the current account deficit is turbulent. That means it is going up and down. And this is all because of the tariffs and related issues. Okay, but the strength here is, okay. On the capital side, there is a trouble. For example, why there is a trouble is, foreign investors are moving out of India due to different other reasons also. So you can't say only when macroeconomic stability is fantastic. For example, one reason can be Indian market is overvalued and earnings are slowly improving, but the valuations are very high. Company valuations are very high. Therefore, they are moving out of India. It's not that our macroeconomic stability is completely bad. This is also one more logic which they are talking about. That means our macroeconomic stability is okay, but they have invested so much that the valuations have skyrocketed. Valuations of the company is too high, okay, but the earnings of the companies are not matching their valuation, and therefore they are moving out. Second, rupee value fall. You earn money, you earn your profits in rupees, but when I divide it by 92, earlier you used to divide your profits by 80. Now you are dividing it by 92. Tomorrow you will divide it by 100. When $1 becomes 100, then automatically what will happen? Their profits are going to reduce. So there are many reasons, and there are certain markets like the Brazil or other markets where there is better valuation, and therefore they are moving out. And government is not worried about that. Government is saying we are more stable, and they will come back later. Immediately we will not show anything in the budget. Budget nothing was shown, so that these investors will return back immediately. Nothing was visible in the budget yesterday. Very clearly, government is saying, we will wait for you to come back because we know India is strong from inside. This is what is the logic. Is that clear? Okay. No. This is another topic, which is inflation tamed and anchored. Okay. Now, of course, see here, there are two sides of looking at inflation. One side of looking at inflation is, yes, my inflation is less, very decent. Vegetable prices have come down. We had a good monsoon. Everything is fine. Therefore, my inflation is okay. And I think you should be knowing in the CPI basket now, the weight for food is going to be reduced. The two changes are coming up in the CPI. One is the weight for the food is going to be reduced, and there will also be a change with respect to the base year. These are the two things which are they going to do now. Okay, so one, CPI consumer price index, they are going to change the base year, and the weightage for food, which is around 45.5, 45.6, it will be reduced now. So these are the two things which, and when you observe countries here, you observe something specific with respect to Japan or Brazil, etc. That you find Japan, there is more of inflation visible in the recent past. That means in Japan, you observe that inflation has increased and interest rates have also increased in Japan. You can see this. But when we look at India, India has seen the highest reduction in headline inflation in comparison to other macro economies. Highest reduction of headline inflation around 1.8%, which we observe very clearly. There is a reduction when we look at other. So, two things here. Some economists say, okay, fine, your inflation is coming down. Is it because demand is a trouble? That is their question. I'm not saying this is what survey is talking about. That means corporates are not increasing the prices of the products, and because they're not confident about demand, is that the reason for your inflation coming down? But government clarifies in the survey that our food prices or vegetable prices are quite decent, and that is the reason our inflation is quite okay. Core inflation is also decent, remains steady at 4.62, influenced by precious metal prices. This is basically core inflation is also looking little high because of gold, silver, aluminium, or maybe copper. These prices have jumped up to a great extent, and that is also core inflation means what? Removing volatile aspects like oil and food. Okay, fine. So here, if you see, India recorded the lowest inflation rate since the beginning of CPI series. Never we had such kind of inflation, and it can indicate stability, but sometimes it can also indicate lack of demand. Government is clarifying that there is stability because of vegetable prices and other things coming down. Okay. Then food inflation, contraction in prices of vegetables and pulses led food inflation to minus 2.71%. So this is basically talking about, yes, food, which is a major basket in my CPI, has come down to a great extent. Is that okay? Yes. And then core inflation remains steady at 4.62. So government is very much optimistic with respect to inflation. But for the next year, we are taking an inflation of 3 to 4%, let's say. Inflation of 3 to 4% because oil prices might increase. Anything can happen with natural gas. Okay, so therefore, prices might increase next year. There's nothing like a guarantee. So if I take 3.54% also, that is the reason government has assumed a nominal GDP of 10.1 to 10.2% for the next year in the budget. I hope it is clear. So this is about inflation. I hope things are okay. So these are basically a brief background of, or we can call it as a theme or overview of the first 4 or 5 chapters. Okay, so that's all.
Preparation without mentoring is like sprinting blindfolded. You may be moving fast, but not always in the right direction. That's why Lakshya 2026 offers 2 focused mentoring paths. For aspirants targeting UPSC Prelims 2026, the Lakshya Prelims Mentoring Program starting 7th February gives Prelims focused planning, regular test, mentor feedback, and clear guidance on what to revise, what to skip, and how to attempt the paper confidently. For those preparing for the entire UPSC journey, the Lakshya Integrated Mentoring Program beginning 30th January provides a stage-wise roadmap from prelims to mains to interview, with integrated current affairs, structured evaluations, and continuous mentoring for steady progress. 2 programs, 2 goals, 1 clear direction. Prepare with clarity, move forward with confidence. To register, visit our website or call us on the given numbers.
Any doubts? Uh-huh. See, IMF giving C rating is of course based on certain factors. So one is the change in the base year, outdated base years are, or basically there are issues with respect to unorganized segment which you are talking about. Okay, and also issues related to base effect and many other factors. Okay, so but yes, that is IMF. IMF is talking about it, but government is definitely government is saying our GDP estimations are appropriate. See, basic problem is there's a gap between the production side and the expenditure side. This is what IMF is also talking about. That means my GDP production and the expenditure side calculation. But the economic survey is more focused on saying my expenditure on C, or with the expenditure side, the C and I are all doing well. So basically, yes, agreed that there are some issues with respect to GDP. Agreed, we agree that there are some issues. But at the same time, compared to other countries, India is doing well. That is what we can say. So C grade, obviously, that means your GDP estimation does not look appropriate for us. This is their logic due to certain aspects. Okay, so yes, that is, so you can't say. So there's nothing we can counter here. See, for example, IMF says my debt to GDP, your debt to GDP is around 82, 83%, which is very high. And India, be careful. Okay, but India says for a growing economy, 80% is quite decent and will not touch 100%. This is India's confidence. So for such situations, it's very difficult to exactly say whether there are always shades of grey. They will not ask. Oh, got it, no? So, if at all they ask, it is basically, so one, our base years are going to be changed with respect to GDP also. Then we'll talk about the increase in expenditures with respect to C or I. And then we'll try to take the stand of India. Okay? Yeah. It is not IMF loan, it is it can handle, see, saying our Forex can handle how much debt? That is external debt. That is basically external debt, around 94 to 95% of external debt it can handle. That means if my total external debt is 10 rupees, okay, so up to 9 rupee 50 paisa, I can manage with almost like, not 100, 95, okay, okay. First of all, we will not have any kind of financial crisis which you're talking about where you'll give away all your Forex. Okay, so that is not possible in India because you see the current account deficit, okay, or the BOP situation. Okay, so even a situation like COVID comes up, also we will not have such a kind of crisis which we have seen in 1990s. That will not be a possibility. Okay, so that's not that, you don't think from that perspective. Okay, that's all.